This is a topic that we've been talking about for many years at Techonomy. Crypto and Bitcoin obviously been in the news more and more in the last couple months. So without further ado, I'm going to hand it over to Jim Ledbetter, who's both the Chief Content Officer at Clarum, as well as the editor of Fin. So I will hand it off to Jim and Jalak for the 40-minute conversation. And like I said, watch in the chat for the meeting link.
Thank you so much, Josh. Your camouflage is giving me like you're in a secret bunker location. Your crypto bunker. Welcome to everyone for what I hope is a fun and instructive conversation. I'm really honored today to be joined by Jalak Jobanputra. She is the founder and managing partner of Future Perfect Ventures. She's been a venture capitalist for more than 2 decades and an investor in Bitcoin and blockchain technology going back to 2013, which is well before a lot of us were paying attention. Jalak, thank you so much for being here today.
Well, good to be here.
Why don't we start with the polls? Because I am curious. So I think we have kind of a range of people's familiarity with blockchain and crypto. Can we post the poll results? There we go. So do you own any Bitcoin or other cryptocurrencies? Strong lead with no, but in considering it, which I think is a prudent choice. Do you think that Bitcoin will hit $100,000 a coin within the next year? The majority goes to who can tell, which again, I think is a pretty good read of the situation. And do you think that cryptocurrency will eventually be used for everyday transactions? A strong majority saying yes, which is very interesting. Great. So Jalak, let's start off by talking about the market, because I think that's what has grabbed a lot of people's attention in recent weeks and months. It's funny, when we conceived of this panel a couple of weeks ago, the way that we were pitching it was, it keeps rising, it keeps going, hitting new highs like every day. And literally the week we put out the email, it started to tumble and fell about 26% in 1 week. Can you talk a little bit about that market, the volatility of it, and what, in your opinion, makes it go up and down?
Yeah, so a big question around Bitcoin specifically and crypto more broadly is how closely it mirrors the broader markets.
Right.
And for most of Bitcoin's existence, which has been a little over 10 years, we have seen a strong correlation with other assets. And frankly, there wasn't a lot of data to go upon because there wasn't a lot of volume, and the volume has certainly picked up. And I'd say starting in 2017, which was more the first more widespread kind of crypto boom. I mean, there were many booms in 2013, and but well before most of the general population had heard about Bitcoin. And so what we saw last March, when all the markets tumbled, including oil and including gold, which is considered a safe haven asset, Bitcoin also tumbled to 3,000. And I think we were in such an unusual macro environment and so much uncertainty that everybody just wanted to go to cash. And since then, we've seen bifurcations in terms of what assets have done well and which ones haven't. And we've seen the equity markets and really led by tech go up. We have also seen a search for yield because we've been in a very low interest rate environment, and
for a long time.
And that's really what drove a lot of the interest in Bitcoin. So it was looking at the kind of inflationary policies that were being put in place by governments around the world, a lot of money printing for stimulus, and then macro investors thinking about what can hedge against that inflation, what assets are independent of government monetary policy, and Bitcoin fits into that category. And as we got more and more acceptance and more of these larger, $1 billion plus hundreds of millions of dollar hedge funds started entering the asset class, plus corporates putting some of their own treasury and balance sheets into Bitcoin as an investable asset, that narrative fed upon itself, and we just saw lots of interest. Increasingly, I'd say I started getting calls last May from money managers, institutions that were really considering Bitcoin, and then we've seen that accelerate, and we've seen companies like Square, MicroStrategy, and invest in Bitcoin. So that was the upward momentum. Now, we all know, if you've been in the markets long enough, that things that go up that quickly have to come down. And I think we saw a correction. We saw some over leverage in the sector, and we've stabilized. But in context, a year ago, or close to a year ago, Bitcoin was at 3,000, and it's still close to 50,000. So if you look at the growth and the acceptance of it as an asset class, I think it's here to stay.
Yeah. So you referred to this increasing mainstream embrace of Bitcoin. Square has made a big investment. I think Goldman Sachs has moved back to allowing Bitcoin futures to trade. BlackRock has recently made an announcement. What do you think are the next stages of acceptance? Like, what does that look like for people who are trying to figure out how close we are to whatever mainstream acceptance ends up being?
Yes. So it was interesting that the poll in the beginning of this session said that most people think that Bitcoin will be used as a currency, a means of exchange. Yeah. That's really how it started when it was created by Satoshi Nakamoto. Is this idea that you could store and hold and freely transfer this currency without government controls, without banks as intermediaries deciding how much you can send when and what the fees are going to be on top of it. So we've seen that evolve into what it is now. It's being viewed as a digital gold and a store of value.
Right.
But what's exciting about it is, at the end of the day, it's technology, and you're combining technology with what is, I think, the biggest social network in the world, and kind of the social construct, which is currency. But this currency happens to cross borders. And so we can see, and there are already companies, and we as our fund invest in a lot of companies that are now offering, the ability to borrow off of your Bitcoin, to lend Bitcoin, to have it function more as a monetary asset, as well as a store of value. And so I think we're just in the beginning of kind of understanding, like, not only holding Bitcoin as a store of value, which we'll hopefully appreciate, but then being able to put that currency to work through these other yield mechanisms. And that's where I think it starts to get interesting. And the more you can do with it, I think the more widespread acceptance there's going to be. And right now we're used to thinking of assets in their categories. Is it commodity? Is it a currency? Is it an equity? And I think what we're going to see in the next few years with Bitcoin and cryptocurrencies in general is, because of the nature of the technology behind it, there are going to be all sorts of things you can do with it. And that's why I think this is the most exciting time to be involved in the sector.
So I want to come back to store of value in a moment, but just going back to this idea of using it in your daily life, it seems to me that there are several barriers to that. One is just the logistics of it. We don't really have a widespread means of doing that. But the other, again, comes back to this very volatile market. If the Bitcoin that you have is worth 20% less this week than it was last week, or 20% more on either sides of the transactions, that becomes something that people don't really want to spend or don't really want to accept. So I mean, Tyler Cohen wrote a piece a couple of months ago for Bloomberg Opinion, in which he said, you know, it can be a currency or it can be an asset. It kind of can't be both at the same time. And I wonder, A, if you agree with that analysis, and B, if not, you know, how do we get out of that seeming bind?
Yeah, I don't agree with it. I think if you had, and going back to the early days of the internet, if you had looked at, how we use the internet these days, I think most people, and I know this because I was involved in the early days, you know, people would say that's impossible. We're never going to watch movies on the internet. We're or a mobile phone's never going to have the same processing power as, you know, as NASA had once upon a time. And you know, they're always naysayers because most people are used to looking at the world through the status quo, and most people are actually paid to perpetuate that status quo. And that's why it's so great to be an early stage tech investor, because you're constantly around people who believe there's a different way to do things, and use technology as an enabler. And so I don't think that we've started to see the potential of Bitcoin. I mean, so I've been in this for you know, eight plus years now, and I remember the days when people said it's, you know, Jamie Dimon called it a fraud, right? Goldman's gone back and forth, and even I mean, I was going through my files in 2015 or so. They published a report just saying that, you know, there's not a whole lot there, and so all these incumbents are motivated to say it's this or it can't be this. Now, so we have a company that used to be called BitPesa, is now called Aza. They started off in Africa, and they're still primarily based in Africa, and are using crypto blockchains as backends for money transfers and for FX transactions. And you know, you don't have to worry about holding Bitcoin. They will do all the hedging for you on the back end, but they create a more efficient way to transfer money and do it with low fees and instantaneous way that you're not exposed to the volatility of Bitcoin. Now, if somebody wants to hold the Bitcoin and also wants to have that potential yield and then use it also as a transfer mechanism, they enable that too. So, you know, there are companies and different business models that are emerging around crypto and the usage of crypto that enable, and this is what's so exciting to me is, you know, right now we're told what risk we can take, frankly, by our governments, by institutions. And I think it would be great if every individual had the power to decide where they're going to place their hard-earned money and invest, and what risk tolerance they have. And I think crypto and Bitcoin as a first example will enable that to happen.
Interesting. Yeah, the development of that payment layer is a very interesting space. I agree. Okay, I'm going to come back to the store of value and push you on this a little bit. There's no question that the design of Bitcoin, maybe even more than other cryptocurrencies, but certainly the design of Bitcoin has qualities that make it very attractive as a store of value. One is the fact that the number of Bitcoin is capped. There will only ever be so many Bitcoin in the world. And another is that it's decentralized and not in control of any one institution. But if you actually look at the way that people treat Bitcoin in the markets, it doesn't look much like store of value. So there was an analysis that came out last month from Bridgewater showing that on some days, as much as 50% of all existing Bitcoin changes hands in the market. That does not look like store of value investment to me. If you compare it to gold, you know, for example, the classic store of value, as you said, where it's maybe, you know, 1% a day, 2% a day maximum, and that's been very consistent. So do you think store of value is a crock that people kind of say that they're using to invest in, or do you think that that's just something that still is of potential use in Bitcoin, but we're not quite there yet?
Well, it's all relative. And if you were if you talk to someone in Venezuela, you talk to somebody in India when demonetization was happening, or in China when capital controls are in place, they would consider Bitcoin a pretty strong store of value. And I think, finance 101, right? You're looking at risk reward profiles. And I go back to how individual it really is. And what is great about something like Bitcoin is we can all individually decide what our situation is, what our macro, so micro as well as macro environments are. So if I live in the United States and I'm seeing a lot of money printing happening, I'm seeing things that, milk is getting more expensive. Like we've seen incredible increases, and I'm doing a renovation right now, and the goods, the price of goods have went up in January. They're going up again in March, and so you experience all of that, and then you look at, relatively speaking, what is a store of value, and where do I want to put my assets? And so, I don't think people should go out and put their entire net worth into Bitcoin, although there's certainly people who do that. I haven't done that, but I do feel that having that option as a hedge, as something that you're in control of, for the most part. Now, I think there's going to be more regulation. We've seen regulation come into play, but
Definitely want to talk about that. Yeah.
Yeah. So I think that store of value narrative is really dependent on who you talk to, and I would say, what other asset would you consider a better store of value? I mean, that's what I would, go back.
I mean, historically, gold, silver, platinum, precious metals are usually the gold standard, if you will, for store of value. But I take your point that it's to some degree in the eye of the beholder, or the eye of the investor. When we talk about success of cryptocurrency, we usually go to Bitcoin because it's the oldest and it's the biggest by market cap. But do you think it's necessarily the leader? I mean, could it be replaced by an already existing cryptocurrency, or one that hasn't been invented yet? And what are the qualities of a cryptocurrency that might make it more valuable or more useful than Bitcoin?
So what's made Bitcoin the gold standard of crypto is the fact that it's been around, it's proven, it hasn't been hacked. The actual Bitcoin blockchain has not been hacked. It's highly secure. I've worked with core developers for a long time through some of our early, 2013, 14 investments in the sector. And one of the things that Bitcoin has been criticized, or the Bitcoin blockchain has been criticized for, is being too slow. That upgrades to increase the transaction processing power within the network, those upgrades aren't implemented as quickly as they may be on other chains. But the trade-off is it is more secure than the others because of that. And so I've always believed that we're going to have a multi-crypto, multi-blockchain world, that we're going to have different blockchains and cryptos for different purposes. If you look at Ethereum, it's very much a development platform.
Explain what that means, that it's a development platform.
So Ethereum is a smart contract platform where developers can build different applications on it using this concept of smart contracts, that if one event happens, say I have, and once I get a certain amount of collateral, I will then lend out or be able to borrow money, crypto based on that. And so it's this idea that you can build different applications lending that are all automated. So, right now I have to go through a mortgage broker to get a mortgage. Now, what would happen if that could happen in an automated fashion, depending on the certain characteristics, where I would be released a certain amount of money depending on the condition of the house, and so it's basically being able to disintermediate. Right now, a lot of it's the financial system. We're also seeing this concept of non-fungible tokens that have taken hold over the last. They've been around for years, but I'd say in the last few months, we've seen a lot of buzz around non-fungible tokens, and most of them are built on the Ethereum blockchain, not all of them. And it's this digital art that you can start to wrap other, say I buy a piece of music, the artist can issue 10 of those copies of music that then wraps around a private session with the musician. And so there are kind of all these new products. So you can think about it as new financial products that can emerge, but there are all sorts of different assets and products that can be programmed in a digital way. And Ethereum allows for a lot of that to happen through a smart contract platform that they've developed. I would say Ethereum has very different uses than Bitcoin does, and it doesn't have that limited supply that Bitcoin does, and so that Bitcoin has a scarcity element. I'd say that Ethereum has a utility element. And we're still very early days, so we can see both of these platforms morph. And there are companies working on making Bitcoin more of a development platform, a la Ethereum. There are new cryptos that are emerging that are attempting to increase the amount of transactions that are possible, so you can actually do more real-time trading than the Ethereum platform will allow you to do. So I go back to the mid to late 90s internet in terms of scalability, and look at how prominent Netscape and Yahoo were back in the day. Now we can have other companies that come and do what Bitcoin and ETH do better. I think Bitcoin has become this kind of narrative, on its own. And I'm not saying nothing's going to displace that, but I've seen very little that has kind of the simplicity that Bitcoin has.
Yeah. It's an interesting point, talking about the dominance of Netscape and Yahoo. The journalist James Fallows once wrote, if there were such a thing as first mover advantage, I'd be writing this on a K-Pro and you'd be reading it on a TRS 80, which I thought was a very—
And remember Palm Pilots.
Yeah. Oh my gosh. I got so frustrated with mine, I threw it out the window. There's somebody, I think there are probably people in the audience who don't know what an NFT is, and then there's at least one person who seems very interested in NFTs who's just told us that Kings of Leon just announced their new album will be an NFT. Would you just explain it briefly for those who have yet to encounter the virtues of cats that look like pieces of toast?
So NFT stands for non-fungible token, and it's we talk about Bitcoin and scarcity, and the fact that each Bitcoin or piece of Bitcoin has a code to it that unlocks it, and it's a unique code. So if you take that concept to any asset, and so trading cards, many of us grew up with baseball trading cards, sports trading cards, and those were unique pieces. I mean, they had prints of them, but many of them were in limited editions. And so think about now moving those to a digital format, and they're verified to be true. Now people say you can make a digital copy of anything, but if it's issued by, say, that's a baseball star, and he only authorizes 10 of them to be issued, you can go in and buy one of those copies, and then you can later trade, and that provenance and this can happen for physical. You can put physical asset information on a blockchain, or what's happening now is a lot of these are digital formats. Right. So with Kings of Leon, I mean, music is a great example of music is often kind of copied, listened to, and the artists often don't get royalties, or it takes years for them to get royalties. So if they issue a digital copy that can be tracked and can be tracked on a blockchain, just like Bitcoins are tracked on a blockchain, you can take a piece of music, track it on a blockchain. You can see how many times it's being accessed, played, how long it's being played. You can put a limit on how many times it can be played, or then you can also, going back to that smart contract, if it's played by another party, there's a smart contract that automatically rewards the creator. So a lot of things that can't happen in the physical world or take a really long time. It's like taking a piece of cash, right? A dollar bill, and then you can't really track it once it leaves certain hands, or it would take a really long time. So that's true of a lot of other assets, including music. It's become more and more digitized, but this allows this provenance, and then also lets the creators interact directly with the buyers of the music, and then they can offer free concerts to somebody who buys a certain amount or pays a certain amount extra. So we're just in the beginning stages of what's possible. It's been exciting to see artists and creators get involved in the conversation, because crypto has been a very kind of technical conversation for many years, and we're now seeing broader kind of industries get engaged and see how this whole concept of provenance, of being able to track discrete pieces of data, whether it's music or a Bitcoin, how that can kind of benefit both fans as well as the creators.
Very interesting. I want to talk a little bit about what I think of as the dark side of crypto. There was a case recently in New York State where the Attorney General has got a $18.5 million settlement from the people behind Tether, which is a stable coin that was advertised as being backed up one with $1 behind every coin, but according to the Attorney General's investigation, that was not the case. The company was playing fast and loose. There have been allegations that Tether coins were used to manipulate the Bitcoin market, which I don't think has ever been proven, but there's certainly a strong case. There's apparently one person or collective that owns 28% of all Dogecoin, which does not strike me as a recipe for a healthy market. How seriously do you take those issues, and what do you think would be necessary to resolve them to the point where they don't spook some more traditional or conservative investors?
Well, we've seen a lot more traceability, especially as it relates to Bitcoin over the years. And one of the things we invest in, what areas we invest in, is all the infrastructure around crypto assets that both foster innovation and these kind of new products that I'm talking about that can be built on blockchains, but also allow investors, and I believe, I want to see all individuals hold some crypto of some form and have their own kind of be able to have their own financial sovereignty. But I think we need to make sure that everyone is protected. Look, there are always kind of bad actors in markets. And I would say there are always speculators and folks that want to take advantage of a lack of regulation, which for most of its existence, Bitcoin didn't have much regulation. And what we saw in 2017 was this big run up, and it really took regulators by surprise. They're much more on top of things in terms of understanding the technology. They've hired technologists on staff. And so what often do is engage with these regulators to make sure they understand the promise of the technology. And we talk about financial inclusion, and the SEC just expanded accredited investor rules. And they're very cognizant of the fact that for financial inclusion to happen, we have to allow people to invest in different types of assets. And so I very much educate them on all the potential of the technology. And at the end of the day, this is all trackable, and there are privacy coins that are less trackable, but I believe in free markets. And I think crypto can create the biggest free markets, the most where people can choose, if they think that a certain stable coin or crypto has some shady business going on around it, they can choose to take their business elsewhere. And I think transparency needs to be a part of the process. So I think the market should shake itself out.
So let's talk a little bit more about regulation then. The nominee for the SEC, Gary Gensler, actually taught blockchain and Bitcoin at MIT. I think he has a pretty good grasp of it. What do you anticipate for crypto regulation in the near future? And do you have in your own mind an ideal framework for how it should be regulated?
So, wow, that's a good question on the last part of it. I believe in as little regulation as possible while a technology takes hold. We saw this happen in New York, where they passed the BIT license. They were the first jurisdiction to pass legislation, and so much has happened, so much progress has happened since then, but it really spooked companies that were building in the space because they didn't know how the law was going to be interpreted, and they just there were no precedents for it, and they were always concerned that there was going to be a heavy hand when there were any cases. So it
created a lot of business for New York lawyers, though.
Oh yeah, well, the lawyers always do well, no matter what. Whether the markets go up or down, or deregulation or regulation happens, the lawyers always seem to make out. However, I believe that I think the U.S. had. I mean, we had one jurisdiction do that, and then we've seen other jurisdictions that have taken a more hands-off approach and have certainly attracted a lot of talent.
Wyoming,
yes,
notably.
Wyoming.
Yeah.
I'm in Miami, and Florida. The mayor of Miami has been very open to talking to folks in the industry and figuring out how to support the sector. So there are definitely jurisdictions in the U.S. worldwide, and again, this goes to the free market approach, where those are jurisdictions that attract a lot of the entrepreneurs who aren't looking to get around regulation. They just want to be able to innovate and kind of prove out their business. And so, the notion that, it's a shady, it's just shady entrepreneurs that don't want regulation, I just think is a fallacy. That innovation needs to have open space.
A lot of the people in this space that I talk to will say, I actually don't care what the rules are. Like, make whatever rules you're going to make. Just tell me what they are so I can figure out if I'm breaking the law or not. There's just been so much gray area and so little appetite when Trump was in office to actually set clear boundaries, and I'm hopeful that we'll see a little bit more of that soon. We're going to switch to this other format in a moment, but I wanted to ask one question that isn't about crypto, but more other applications of blockchain that you think are really exciting right now that are coming, in front of your firm.
So I think crypto in general and crypto economics as a business model are very interesting to us. So when the beauty of the Bitcoin blockchain was this idea that this network of computers is incentivized to keep this master ledger that resides in thousands of places around the world. And the reason they're incentivized is because every time they process a transaction, they get a little bit of Bitcoin. It's a little transaction fee, and as the system is more secure and works functionally, that price, that value of Bitcoin goes up. So if you were to look at any system that can keep data honest and secure, and benefit from keeping that system secure, it's really exciting. So I think about credentialing and education, and
Yeah.
we know that not everybody is going to be able to go to college, and nor should they go to college, right? And everyone has I believe strongly, everyone has a skill set, something to contribute to the world, and most people do want to contribute. So if I could give that woman in Rwanda an ability to prove that she can code or build websites, and there are enough people in this network that can vouch for her, and then as that credentialing system takes hold, and stays honest, and that crypto associated with that system will increase in value. It could be a separate crypto, it could be tied to Bitcoin. So you can think about healthcare records,
Yeah.
or contributing to science and contributing my data to research. And but I can decide if I want to contribute. I may want to just contribute certain elements of my information. So some of my medical history, not my address, maybe my gender, and I can permission that out. And then companies can benefit from that data, but without having that data be hackable. And
such an exciting proposition. All right, we're going to switch now. Bear with us, attendees. We're going to try and bring as many of you into a video chat environment as we can.
Digital dollar, and those I don't put into the category of cryptocurrencies. I view them as digital currencies, which are digital representations of the fiat currency, but they're still being issued by the central bank. What is different is it's more trackable and traceable than cash is, and so crypto is more decentralized to me. The way Bitcoin is stored on the ledgers are stored on a network of computers. Central bank digital currencies will be stored on if it's a few computers, but all controlled by the government and the central bank. So I think this is their way of being able to track their currencies, and utilize technology to track their currencies. And this process was sped up by Facebook announcing a digital currency. I think central banks for the first time realized that they were under threat. Their fiat currencies could be under threat if there is an independent entity that had 2 billion customers around the world that issued a currency that could be used as an alternative. So I think they're going to all coexist. I don't think you can keep Bitcoin from being used as a means of transaction or a store of value. We have seen countries try to do that around the world. Nigeria is the latest. India also, they tried this once before, that their Supreme Court overruled the ban, and now they're trying to implement another ban. But when you talk to people on the ground, they figure out ways to hold Bitcoin and other cryptos. So we will see governments try to assert more control, because we've now reached a scale where it is enough of a threat to them.
Yeah.
Thank you. It's interesting, crypto or tracking and China being married there too scared me a bit.
Yeah.
I would note that recently, I think it was in October, the Bahamas actually issued a nationwide sand dollar, they call it, digital currency that's available nationwide, and you can now get a MasterCard that comes loaded with a certain number of sand dollars. I do wonder, and this is a sort of maybe a slightly different way of asking the same question, if you have a central bank digital currency that gains widespread acceptance and use, and China might be the most likely case for that. Does that take away from the attractiveness of Bitcoin, or does Bitcoin then become the province of a certain type of consumer or investor, whereas everybody else is using the digital currency? Will we have kind of a two-tiered or multi-tiered digital currency system? Jalak, is that something that you give much thought to?
Oh yeah, I think about this all the time. I think this is so fascinating to see, again, because money and currency has been used as a geopolitical tool ever since its creation, and I expect digital currencies to be no different than this. And if you look at China, and their reach into Africa and the African continent, and the fact that they are looking at doing pilots with a digital one and countries in Africa, you can see how this could also become an alternative to the dollar, right? Because the dollar has been the world's reserve currency. It's no surprise that China it is one of the first countries to implement a digital currency because they can see the potential in displacing the dollar. I think the dollar, the US has been slower to do so because I view them as the incumbent, but they now see the threat. Where I think digital currency could be interesting is for countries that are smaller and don't want to be as dependent, or create regional trading hubs. However, you know, and it can also give them more control, right? Say South Asia could create one where it's kind of easier to trade with each other within that hub, and they're not as dependent on external economies, I do see China making inroads kind of outside of China, and looking at their trading partners. But I think this can create potential for individual countries to take a more prominent role on the world stage if they figure out the right monetary policy around their digital currencies.
Do we have other questions? I know, Clyde, you had one.
Yes, I was just curious, Shalak, if you owned Bitcoin personally, and how early, if that was the case. And the last piece of that is, what were some of the triggers early on that made you say, hey, you wanted to move forward with the purchase of Bitcoin or any crypto?
Yeah, I do hold Bitcoin personally, and we also hold some through our fund. I've been involved in the sector. Started holding in 2014. Started kind of looking at the sector earlier than that. I'm quite contrarian, and although it doesn't feel like that these days, given everyone's kind of jumping on the bandwagon, which is great to see. But I wanted to see kind of a shock happen to. I was very fascinated by the concept of Bitcoin, and having been born in Nairobi and spent a lot of time in the emerging markets growing up, this whole idea of financial sovereignty, when I was exposed to so many countries and governments that didn't provide their people that. So, what I became, when I became really interested and went, I'd say more into the sector, is after Mt. Gox happened, which was the crypto exchange that was hacked in 2013. And instead of driving, so it drove speculators away, it scared a lot of people away from the market, but the builders stayed, and they were actually more interested than ever in Satoshi Nakamoto's vision of this global borderless low transaction mechanism for moving money. And so when I saw that passion, it's kind of like the entrepreneurs that stayed past the .com bust, right? They were still dedicated to the concept and actually were more free in some ways to build. And so 2014 was when I went more all in the sector, and that's when a lot of people fled the sector and stayed in it through the crash of 2018, and we're now seeing a lot of great companies that were built from those days take hold.
That amazes me. I don't think I've talked to anybody else who saw Mount Gox as a buying opportunity. I'm very impressed. Uh, any other questions?
Yes, I have a question.
Great.
I see spending Bitcoin as a IRS nightmare, because if you think of having a Bitcoin account and spending it every day or occasionally, because the Bitcoin value changes so much, our IRS tax you based on whatever your current price is if you do a transaction. So how do people like PayPal or people that use Bitcoin and spend it, how can they deal with IRS situation?
Yes, this is this is a major major problem in terms of it becoming a medium of exchange. I mean, right now, there's taxation, as you mentioned, you get taxed on a transaction. Now we have this this financial infrastructure that's being built, with stable coins, and we have a number of portfolio companies also doing this, where they're allowing kind of the digital conversion of different cryptos without without creating those actual transaction events. And so I do believe it's going to be possible. I mentioned it with the company in Kenya that we've been working with, BitPesa. There are companies that will handle those back-end transactions for you, and we're going to see more and more of that start to emerge, where the individuals are not kind of prone to the same, won't have to deal with the tax implications of these. Now, also, a lot of these companies are working with the IRS and working on new regulations around tax rules as the technology continues to evolve, and if we start to see it used as more of a medium of exchange. And so it's a dual-pronged approach between technology as well as regulations that are, will change with the times.
And I'll point out for the audience's sake, current IRS rule is that Bitcoin, although it calls itself a currency, is taxed as if it were property, which is for some people certainly a bit of a barrier, because that's a pretty high rate of tax. David Kirkpatrick has a question.
Thanks, Jim. Jalak, you're great. This is a fantastic session. But my question is related to the previous one a little bit. It's an intersection of the volatility of Bitcoin and the prospect that it might actually be used to buy things, which to me is a very illogical juxtaposition. I mean, as long as any asset is highly volatile, it seems there's no incentive for either buyers or sellers in general to use it. So I guess the question is, do you think that if crypto, which this audience seems to think in large number, is going to be used in daily exchange, that it will be Bitcoin, or will it be something else, or will Bitcoin ultimately settle down? So all those questions.
Yeah, I mean, I was going to say, I view Bitcoin as more established and less volatile than it used to be, but I mean, we certainly see volatility in it these days. So I think we're going to have different digital currencies that exist, and now whether Bitcoin is going to settle down, in your words, and be that digital currency that's used as a medium of exchange or widespread medium of exchange, I'm not sure. I mean, there's something called the Lightning Network that's been under kind of development for many years. It was incubated at one of our portfolio companies, Blockstream, and what they're allowing is the building of these payment channels on top of the Bitcoin blockchain. So you can you can open up payment channels, say between me and you, or me and another entity, and they're all collateralized, and this is still very early days and being built out. So again, that doesn't mean that the actual Bitcoin is settled right away, that there are ledgers that are being created for every transaction. So there's technology like that that may be built upon the Bitcoin blockchain, where Bitcoin can be used as a underlying settlement layer. But there's also new cryptos and new digital currencies that are emerging that may be better forms of a medium of exchange. And what I'm really excited about too is this whole concept of using, I mean, we have loyalty points that reside in all these different silos. We have, credentials that we all carry around. So wouldn't it be great? And this is the ultimate vision. I don't know when we're going to get there, but we're certainly investing very actively towards this world where all of that resides in your digital wallet. And I could use a loyalty point, and that gets converted to Bitcoin at some, I don't want to spend my Bitcoin, but I'll spend this loyalty point, and it gets converted in a marketplace at some market clearing price. And so I think that we're going to live in a multi-blockchain, multi-crypto, multi-digital currency world. Now, when we get there is the question, but we're definitely seeing a lot of innovation moving towards that.
We probably have time for one more quick question.
I'll jump in.
Please identify yourself.
Yeah, David Needle. Hi.
Hi.
Great, great session. I noticed in Coinbase's IPO, you referenced Satoshi, in their risk factors, they mentioned that the release of his identity might upset the market. Do you have any thoughts on that?
Yes, I mean, at the end of the day, there's just so many rumors about who he is,
right,
whether he's alive, and I think it was smart of them to put it into the S1. And I mean, there are folks that say, well, his coins haven't been moved, the wallet hasn't been touched, and so he may not still be with us, and or he may just really believe in this world and unleash the power of this technology without having any financial desire to financially benefit from this. So yeah, I mean, look, I think that is a risk as long as he's anonymous. But I think as we've moved along and as we've seen this incredible value creation, just like the early days, there was a risk of this 51% attack that 51% of the computers, decided to liquidate, then that would crash the whole system. I mean, as we've moved on in time, I think that risk becomes less and less.
Okay. Interesting.
Great. I think we should wrap it up. I want to ask everyone, and I guess we don't applaud in a digital environment, but in your mind, please thank Jalak for me. Join me in thanking Jalak, and thank you all for attending, and have a great weekend.
Thank you. It's great to be here. Take care.
Thanks so much.